This is Samsak, and in this video we are looking at mortgage-backed securities. So first of all, we need to look at how does a mortgage-backed security work. Now firstly, a bank or mortgage company will make a home loan. So this loan will have an interest rate attached to it. The lender can either keep the loan in their own portfolio or they can sell it on the secondary mortgage market. So if a lender decides to sell the loan, this will free up capital to make new loans. The lender will also make money off a sale because a small percentage of the interest rate you pay will go to the servicer. Now when the loan is sold to a larger bank, it will be combined with a bundle of other mortgages with similar interest rates. So the larger bank will then issue shares of this security, called tranches, to investors who buy them and collect the dividends in the form of monthly mortgage payments. So these tranches are split up into different levels of risk, where some of the highest return loans, because of the high interest rates, are the riskiest. Now this is because there is a higher risk of default. So this all means that the bank selling the mortgage-backed securities lose nothing if the home buyer defaults somewhere down the road. Now all in all, in principle, the process works for everybody concerned, but that is if everybody does what they're supposed to do. Now that is that the bank keeps to reasonable standards when granting mortgages, the homeowner keeps paying on time, and the credit rating agencies that review mortgage-backed securities perform due diligence. But now it's time to look at how mortgage-backed securities contributed to the financial crisis of 2008. Now prior to the first decade of the 21st century, a bank would always exercise due diligence when considering lending money for a mortgage. So this meant that banks would want to know all about an applicant's financial stability, such as their income, debt, and credit rating, and they would want this verified. However, with mortgage-backed securities, lenders no longer assumed the risk of a loan default. So as a result, lenders started to loosen their restrictions to mortgage applicants and started to lend to subprime borrowers. Now these are borrowers with low credit ratings and a high risk of defaulting on their loan. So this meant that a lot of borrowers started to default on their loans, and many of these subprime mortgages became worthless. So the fact that many people were defaulting on their loans also meant that foreclosure rates started to increase. Now foreclosure is where a lender forces a sale of an asset used as collateral to pay for a loan. So this meant that more homes were released on the market, and therefore housing prices were also brought down. Now this was after a boom where housing prices has continued to rise. Now in some cases, some homeowners owed more than their house was worth, and this only increased the rate of foreclosure. So the existence of mortgage-backed securities only exacerbated the financial crisis because many other big institutions owned many mortgage-backed securities when they began to lose value. So this meant that when banks won't purchase these loans, direct lenders become less likely to lend money to customers. So this has a knock-on effect on the economy and meant that customers started to spend less money, and this means that companies decline. Now in the end, the US Treasury stepped in with a $700 billion financial system bailout, and this intended to ease the credit crunch. The Fed also bought $4.5 trillion in mortgage-backed securities over a period of years. So now let's briefly look at mortgage-backed securities today, as mortgage-backed securities are still sold today and there is a market for them because people will generally pay their mortgages if they can. However, there are more regulations on them to prevent a rerun of a 2008 financial crash, and mortgage-backed securities must provide disclosures to investors on several points. So this means that there are fewer than before. So thanks for watching. If you click on my website link in the description, there is a link which will give you a free share of up to £100 if you follow the instructions. But thanks for watching and see you soon. Bye.